I want to throw up this chart which takes a look at the potential to shift away from the focus on bond purchases, right? As we see yields become unhinged from that 1/10% target, could they be aiming for November 2024? And I suppose more broadly, is today the meeting where we hear, them talking about normalisation, given that there's a lot of uncertainty in Melbourne, for example?
Yeah, I think today for the RBA, we're going to be marking time. I think we're not expecting a move from the RBA here, but the strength of the Australian economy, has been really telling. And, higher commodity prices, we've seen, massive fiscal stimulus. And I think we're really starting to see a point at which monetary policy has to be recalibrated. We've seen it on the fiscal side. We've seen a recalibration of fiscal policy. We now see the point at which monetary policy really has to start to move forward.
How much is the strength in the Aussie dollar, or conversely, I guess, the weakness in the greenback going to be a continued bugbear for policymakers? Yeah,
I think this is the biggest challenge for the RBA, because the Aussie dollar, they don't want an unwarranted appreciation of the Aussie dollar here. And that's why we don't think the RBA will move before the Fed. We've seen the Bank of Canada, the Bank of New Zealand moving to a more hawkish stance. Where the RBA and the Fed have really been sort of digging their heels in. And that's because they're outcome-based inflation targeters. And, one of the reasons why we haven't seen a hawkish shift from the RBA and the Federal Reserve.
As markets price a lower chance of the RBA rolling its yield target, we have seen a widening of the spread between the April and November 2024 bonds. What's the trade here, and what's the entry point that you're looking for?
Yeah, in terms of the rates market, we really do think we're going to see a shift from the RBA in July. Our view is that the RBA should look to abolish yield curve control and actually really have more flexibility around the recovery and just utilise their QE program. And, we really think this means that we do see higher yields in Australia. This time is really different. Recovery is really being boosted by fiscal stimulus, and we're now at a point where we see the RBA really needs to shift to manage a much stronger recovery.
If we see Aussie yields ticking up higher, could we see a widening of the Aussie-US 10-year bond spread? And do you anticipate that the Australian bond supply-demand imbalance will continue?
Yeah, I think that's a good question, because in the US, that's the market that we do see most underperformance. If you think about the US, that's where we see the most inflation pressure, and an environment where we do see economies overheating, the Fed potentially getting behind the curve, having to hike much harder and much faster. So, we do see the US underperforming the Aussie market. But Aussie bonds are a price taker in this environment, and we do see Aussie yields moving up in line with US yields this year.